A very good afternoon to you, friends. I'm Sanjeev Singhal, Chairman of the Auditing and Assurance Standard Board. Uh, I and my Vice Chairman Vishal Doshi ji welcome you to this fifth webinar of the Auditing and Assurance Standard Board for this month. This is a series of the Auditing Standard webinar that we are doing. Last month, we have done 18 physical programs on the bank audits, and this month we are doing the webinars on the auditing standard. Today's topic is using the work of another auditor, internal auditor, and an auditor's expert. So we will be covering SA 600, 610 revised, and 620. And friends, while we know that the ultimate responsibility for the audit report lies with the auditor who signs the audit report and who approves the financial statements. But in the course of audit, you are often required to rely on the work of experts. These experts could be the actuaries, these could be the valuation experts, these could be the internal auditor. Now, to what extent you can rely on their work and to what extent you will remain responsible for your audit report, that needs to be borne in mind. Of course, we need to rely. For example, for the actuarial valuation, we need to rely on an actuary. But whether by doing a blanket reliance, we stands discharged as the statutory auditor, the answer is no. For example, if an actuary has taken assumptions which are not realistic, for example, for salary escalation, for medical cost, or for the attrition rate, etc. As an auditor, we must review the same. We must validate the same. The final product is computed by the actuary, but these assumptions play a very important role. Similarly, if I have to talk about a valuer, again, we must validate the assumptions which the valuer has taken. Fine, I mean, we may not be applying the Black-Scholes model on our own, but at the same time, if the assumptions are not valid, we will remain liable for the ultimate product. Similarly, in the internal audit, see, now in the new CARO, we are required to comment on the internal audit system as well. Earlier also it was there, then it was withdrawn for a certain period of time, and now it's been introduced again. So many times this question is asked, can we rely on the work of an internal auditor? Do we need to coordinate with them? So as an auditor, we must go through their audit reports, and we must also sit down with the internal auditor, look at the internal audit plan. It should cover all the areas, preferably over a period of 3 years. And whatever are the key observation of the internal auditor, we should see that these have been properly addressed. So these are the three topics, which we'll be discussing in today's webinar. And it's an attempt that we cover all the topics, say by 15th of May, so that our members can make the best use while discharging their test function during this peak audit period. And once this auditing standard on series is completed, we'll start the series on various clauses of the CARO 2020, which is again a very, very important topic. And today I'm happy to share that we have two experts on the subject, C.S. Sandeep Danodia ji, who is a partner with S.R. Danodia, a very renowned firm in the northern India with a huge legacy, and a very young and dynamic speaker, C.A. Utsav Dogra. To give the keynote address, I requested my senior counsel colleague, Mangesh Bhai, as we call him. He is Mangesh P. Kinnare, and he's the chairman of a very, very important board, the Ethical Standard Board. And I've seen his passion for the technical subjects. That's why we requested him that he acts as a keynote speaker on, speaking for a few minutes on the theme for today's webinar. I'm really thankful to Mangesh Bhai, because in the last 2 months, when I'm with him in the 25th Council, I've seen, the passion with which he speaks on the technical subject and the depth of his knowledge. So I'm really thankful to you, Mangesh Bhai, and I'm sure that the participants will be greatly benefited by your keynote address and by the deliberation of both the esteemed speakers, Sandeep Bhai Danodia and Utsav Dogra. So Mangesh Bhai, can I request you to kindly deliver your keynote address? And thanks for taking out time. Thank you.
Thank you. Thank you, Sanjeev Bhai, for giving me this opportunity to interact with the members on a very important topic. Dear members, good afternoon to all. As Sanjeev Bhai has said, senior council member, I'm not senior, I'm just same second term with him. And I have seen, in fact, Sanjeev Bhai is leading the way in various technical matters, and we are simply supporting him as such. He has been in Auditing Assurance Standard Board and Sustainability Reporting Standard Board. I mean, he's doing a wonderful job. And here, along with my another young first-term council member, Vishal Doshi, in AASB, they are doing, again, a great job of educating the members. And the target which they have set is really very good and a meaningful target that it should be completed by 15th of May. I was just wondering that in this auditing subject, how I'm being called as a keynote speaker, but perhaps I think that being a chairman of Ethical Standard Board, and especially the topic today, where is the interlinking of two different, I can say, verticals of profession is there. The ethical issues perhaps also will have to be considered in addition to the standards which we have. Standards, of course, lay down certain principles, but ultimately, as we all know, friends, ethics are imbibed in us, and ultimately we have to interpret this standard in a more ethical manner. As Sanjeev Bhai has rightly said, that just because somebody is saying that internal auditor or expert's opinion is taken, whether I can rely on it, and now that whether has a very important role to play in our mind. And while that whether aspect has to be and how much aspect is to be considered, I think here the code of ethics also play very, very important role. As we all know, the 5 fundamental principles, right? Integrity, objectivity, professional competence, and due care, and confidentiality, and of course, professional behavior. Now, in this professional competency and due care, I think is a very, very important, and another way is objectivity. Now, when we consider this independent opinions of the experts or internal auditors or other joint auditors or branch auditors or so, it is very important that these things have to be considered objectively. And your own opinion as an auditor is important, not just because they are opining on something. I am relying on that blindly, and that cannot be done. So objectivity. Similarly, the professional competence and due care. Now, when I'm doing my audit, I'm supposed to be competent in my audit. So only and only for an allied things, I am taking the expert's opinion. And while relying on that expert opinion also, I must take a due care. And that is, I think, the underlying principles of code of ethics if I have to interplay with these auditing standards and today's subject. In fact, friends, you may be knowing that in a volume 1 of Code of Ethics, para 320.10 also deals with dealing with the expert's opinion. Now, I mean, almost all similar kind of principles are there, but there, I think the volume 1 of our Code of Ethics underlines one important aspect. We may also have to take into consideration whether the opinion on which I am relying, the person who is doing that opinion, whether he is abided by any code of ethics or code of conduct or not. That has been mentioned in this para 320. I think that much, I think we must ponder upon. As we all know, I'm not going to speak on technical subject. There are 2 areas who are there. But when we do rely or when we try to take help of any other expert, the various aspects will have to be considered. And I think here, the independence aspect, because especially when we rely on other chartered accountants' work, the independence, hitherto, I think we were just thinking that only the statutory audit function requires independence. The independence standards which have been incorporated now in 4A and 4B chapters of volume 1 from 1st July 2020. Now, this independence is also required for non-assurance functions. In internal audit also, in some way or the other, the independence aspect is there. So when we are relying on internal auditors, standard will of course explain us in a detail and documentation and all other aspects. But from our code of ethics perspective also, right, whether this internal auditor independence and expertise is there or not, some way or the other, we must have ponder on this issue. As I said, I'm not going to talk on technical aspects. I'm, as an ethical standard board chairman, perhaps I thought that few aspects of code of ethics in a very limited time, couple of minutes or so, I thought that let us have this insight also when we are interpreting or when we are applying the auditing standards to this very important aspect when we are going to conduct an audit. And further, friends, there are so many other laws which have to be complied with by the entities, and we may have to take an opinion on the of the experts on those laws or those aspects, and how we are going to take an opinion, who is the person who is doing that, giving that opinion. Now, all these things, when we are listing down, I think our ethical principles or code of ethics aspects also will play a very, very important role. So I'm just touching that, and I'm just giving you what you can say is another broader outline in addition to the standards to ponder upon. I don't think that I'm expert to dwell upon this subject in detail, and we already have a couple of experts who is going to take you through this very important subject. So I think my job is only this, as an ethical standard board chairman, to have this insight of ethical issues also, and consider this while relying the work of the others when we conduct our statutory audit. So that is the only thing which I would like to initiate the discussion with. Thank you very much for the opportunity, Sanjeev Bhai, once again. And I'm pretty sure this session is going to add a good kind of a additional knowledge to chartered accountant. Of course, we are aware of these standards, but I think these faculties will definitely give more insights to it. And considering the recent changes which have been coming in company law, also there are so many changes which have now been taking place. So this is going to play a very, very important role. As far as chartered accountants are concerned, we already have a non-assurance functions laid down in Companies Act. So when we are relying on chartered accountants' opinion, how we are going to look into it, I think all these aspects should be holistically considered with these standards. And I think in the next couple of hours, we'll have definitely great learning experience. So thank you, Sanjeev Bhai, once again for giving me this opportunity to interact with the members and expressing my views on the, one can say, additional insight or, outer broader outline of ethical views or ethical standards, how we have to take into consideration while considering this subject. Thanks a lot, and over to you.
Thank you so much, Mangesh Bhai. Ethics play a very, very important role, and no audit can be complete unless it is done ethically. And the government and the institute and the whole world is playing a lot of emphasis on ethics. So the way you connected the subject with the ethics is really was really music to our ears. Thank you so much, Mangesh Bhai. And now I request the two esteemed speakers for the day, Sandeep ji and Utsav ji, in whichever order you prefer. So Sandeep Dinodia ji will be the first speaker, the opening batsman. So Sandeep ji, I would request you to kindly start your deliberation. And thank you, Mangesh Bhai.
Thank you. Thank you so much, Sanjeev ji, for inviting me to this seminar today. I am really honored to be here. And thank you, Mangesh ji, for your opening remarks. And I've heard a lot about you, and the first time I've seen you on a Zoom. And thank you. I thank the Institute for giving me this opportunity to interact with our esteemed members to discuss this issue. I will give my humble inputs wherever I can and understand, as I have been using these accounting standards in my auditing practice. And as we keep working the whole day and the whole year round, sometimes we forget the finer points of using these accounting standards. So these seminars are actually a eye-opener, not only for the people who are hearing us, but also for the speakers, because we also, when we speak, we get into a little bit more depth of what we are speaking on. So thank you, all of you, for giving me this opportunity. And I will, in my humble way, try to give whatever inputs I can give based on these accounting standards. 610. So I will like to share my screen. Is it a full screen?
Yes, sir. It is visible, sir.
Visible? Thank you.
Yes, sir. Yes, sir.
Okay.
Please.
So SA 610, applicable from 1st April 2016, the revised version came into operation to using the work of an internal auditor. As we do assurance practice, as most of us, we also do statutory audit, and a lot of us also do internal audit. So we understand the importance of the internal auditor from both sides, of looking at it from the internal auditor side and also from the statutory auditor side. So it's extremely important essay, and I must say extremely well written essay 610. What I also really enjoyed reading was the implementation guide, which and the question answers that have been given along with it, which actually once we go through it, answer all your doubts. Most of the doubts, all can never be said, but most of the doubts that you have on how to implement this accounting standard and how to make use of the work of the internal auditor when we are doing an external audit of an entity. So let's go first to where is the need for an internal audit under Companies Act. As per section 138 of the Companies Act, an internal auditor is a must in every listed company, every unlisted company where the paid up share capital is of 50 crores or more during the preceding financial year, or a turnover of 200 crores or more during the preceding financial year, or outstanding loans and borrowings from banks or financial institutions exceeding 100 crores or more at any time during the preceding financial year. It may not be on year end, but it can be at any point during the preceding financial year, or outstanding deposits, company deposits of 25 crores or more at any point of time during the preceding financial year. If any of these conditions are fulfilled, then the company needs to have an internal audit statutorily. Besides this, in a case of any private company, a turnover of 200 crores or more in any preceding financial year, or outstanding loans or borrowings from banks or financial institutions exceeding rupees 100 crores or more at any point during the preceding financial year. So all these criteria are applied to the preceding financial year. If that happens, then an internal auditor is a must. The internal auditor can be an external agency, or it can be an employee of the company or internal audit department. Both are allowed by the Companies Act section 138. Case of a non-corporated entity, since there's no Companies Act compulsion, it is up to the entity to employ internal audit to improve the effectiveness of the entity's governance, risk management, and internal control processes, which the internal audit definitely contributes towards. So this, my friends, is on when an internal audit is necessary for a company. Now we come to what exactly are some important definitions given in the SA 610. One of them is, what is the internal audit function? A function of entity that performs assurance and consulting activity designed to evaluate and improve effectiveness of the entity's governance, risk management, and internal control processes. So these three are extremely important. And like my learned friend also just pointed out, that these, even in the code of ethics, are extremely important aspects to be seen skeptically by the statutory auditors. And while we are looking at forming an opinion on an audit, whether there is adequate internal control processes, risk management, and entities' corporate governance and other governance processes are properly addressed by the entity or not. For this, the internal audit is a great tool of assistance to the statutory auditor. The use then there is another term that is now coming into this accounting standard, is that we will come to that later also, and we will be discussing that a lot in detail, that the internal audit work internal auditor can also be used as a direct assistance to perform audit procedures under the direction, supervision, and review of the external auditor. This is another adjunct of how this accounting standard can be used. Significant, we will be using this term, significant judgments, again and again while we go through this accounting standard. And significant judgments include assessing the risk of material misstatement, evaluating sufficiency of tests performed, evaluating appropriateness of management use of going concern assumptions, evaluating significant accounting estimates, evaluating adequacy of disclosures in financial statements and other matters affecting auditor's report. So these are matters, 5 matters which are of where a significant judgment is involved of the external auditor, where the standard says that we should not involve the internal auditor. So friends, using the work of the internal auditor can be of 2 types. One, when we use the work of the internal audit function in obtaining audit evidence, which is where we are evaluating the internal audit reports. We are interacting with the internal auditor to understand how he has done the work, what processes he has followed, what are the conclusions he has drawn, did he have actual objectivity while he did this, and based on his conclusions and findings, how will it affect the formation of an audit opinion by the external auditor. This is one way we are going to use the internal auditor's report. The second way is where we are actually going to use, we are allowed to use the internal auditors to provide direct assistance to the external auditor while performing the external audit under direct supervision and review of the external auditor. He becomes a part, adjunct of the external auditor and performs certain services and audit processes on our behalf and submits a report directly to us, which helps us form an opinion again. This essay does not apply if the entity does not have an internal audit function at all. Even if there is an internal audit function, there are some situations where the work of that function do not apply if the responsibilities and activities of the function are not relevant to the audit based on the auditor's preliminary understanding of the function obtained as a result of procedures performed under SA 315. The external auditor does not expect to use the work of the function in obtaining audit evidence. So there could be situations where we do not want to use the work of the internal auditor, and the audit evidence, the areas performed by the internal auditor are not relevant to my forming the opinion as external auditor. Furthermore, the requirements of this essay relating to direct assistance do not apply if the external auditor does not plan to use the internal auditors to provide direct assistance. So either we are not using his report, or he has done work on activities which do not support our external audit, or we are not asking him to give us direct assistance. In all these situations, this SA 610 will not apply. The structure of the standard, as I just said, there are 2 kinds. Using the work of the internal audit function. The framework in broader terms is as under. The first step, the external auditor needs to determine whether the external auditor can use the work of the internal audit function or not. For this purpose, the external auditor needs to evaluate the internal audit function with respect to 3 aspects. Now, we will be using these terms again and again and again. Objectivity, competence, and systematic and disciplined approach. If you read these the accounting standard SA 610 and its implementation guide, in at least 50% of the pages, you will find these 3 terms being used again and again. So these are of extreme importance. Objectivity, the internal auditor must have objectivity, it must have competence, and systematic and disciplined approach. And if we are satisfied that all these 3 conditions exist, then we can use the work of the internal auditor. We will discuss again in detail subsequently what these 3 mean. After deciding, once we are convinced that these 3 conditions exist, then and we decide to use the work of the internal audit function, the external auditor needs to determine the nature and extent of work that can be used by the external auditor. So then we will look at his reports, we will interact with the internal auditor, and will determine the nature and extent of work that I can use out of the total work that the internal auditor has done. After deciding to use the work of the internal audit function and also deciding the nature and extent of the use of that work, the external auditor needs to follow specific procedures for using the work of the internal audit function, which include evaluating adequacy of the work for the purpose of the audit. Now, this is a very wide term, including adequacy of work for the purpose of the audit. So we will have to see, suppose he has done inventory verification, then we'll have to see what process he has followed for inventory verification, what are the documents that he has created for inventory verification, and how has he concluded on the process, and whether the work done has been done with adequate, competent manpower, and he has maintained objectivity throughout the exercise. So the three termed objectivity, competence, and systematic disciplined approach come into operation on each and every aspect of the work that the internal auditor has done, on which the external auditor is relying on. Now, we will discuss a little bit, though they are given, if we look at page 10 of the implementation guide, these are very in detail explained on what objectivity, competence, and systematic approach mean. I will just take you to page 10. Objectivity refers to the ability to perform those tasks without allowing bias, conflict of interest, or undue influence of others to override professional judgments. External auditor shall obtain the appointment letter for the internal audit function and find the scope, reporting authority, appointing authority, and any constraints placed on their scope. So we have to see whether the internal auditor has been given a free hand, or in the appointment letter of the internal auditor, have they been placed any constraints that you can't talk to this person, you can't look at this, you can't go to this plant. If such constraints, are there any such constraints in the work of the internal auditor? It is also recommended that those charged with governance shall oversee the appointment and internal auditor reports directly to those charged with governance. If the internal auditor reports to the management, this would be considered a significant threat to the internal audit function's objectivity, unless other factors such as those described in para A5 to A7 of standard collectively provide sufficient safeguards to reduce the threat to an acceptable level. So, friends, we need to see whether the internal auditor has adequate authority, and does he report to the highest authority, or he reports to a very low level person who may then influence the internal auditor to not to clearly give his findings and to the top management and to those charged with governance. External auditor shall also review whether any members of the engagement team of the internal audit function is employed by the entity in bookkeeping process. Thereby exists a conflict of responsibility. So if the internal auditor is an employee, then he should not have a dual responsibility of line function also, which himself is going to do, and then himself is going to check it and give a report. So that will show the lack of objectivity in his work. As per appointment of internal auditors, if there exists any constraint or restriction on the internal auditor, external auditor shall not rely on work of the internal auditor on such areas on which restriction applies. External auditors shall also search for any conflicting responsibilities of internal audit function of the entity. So, friends, objectivity is an extremely important area to decide before we start work relying on the work of the internal auditor. The second, of course, is competence of the internal audit function, refers to the attainment and maintenance of knowledge and skills of the internal audit functions as a whole at the level required to enable the assigned task to be performed diligently and in accordance with applicable professional standards. External auditors shall review the academic qualifications and experience of the internal audit function in the field of accounts and audit. So here we have to review evaluate the competence of the internal auditor for performing his functions. Then the next important point is the application of a systematic and disciplined approach to planning, performing, supervising, reviewing, and documenting its activities, distinguishes the activities of the internal audit function from other monitoring control activities that may be performed within the entity. Factors affecting the systematic and disciplined approach are as follows: the existence, adequacy, and use of documented internal audit procedures or guidances covering such areas as risk assessments, work programs, documentation, reporting, the nature and extent of which is commensurate with the size and circumstances of the entity. So, friends, this is an important aspect of systematic and disciplined approach, which I think applies to both internal audit and statutory audit, when we both have responsibility of proper procedures, guidance, work programs, which we call audit programs, and assessing the risks and documentation and reporting. This is overlapping procedure that we both, external and internal auditors, both follow. And whether the internal audit function has proper quality control procedures, SQC1, and policies that we follow as an external auditor, we need to see whether the internal auditor also has followed the SQC1 guidance. In case the external auditor determines that any of the above three factors are not adequately addressed by the internal auditor, and the inadequacy of the above factors are too significant. So they may be addressed, one may be a little less, one may be a little small, but we have to determine whether they're too significant considering the size of the organization. He may determine that it will not be appropriate to use any work of the internal audit function as audit evidence. There's some examples of internal audit function that can be used by the external auditor. These are just illustrative. They've been given in the implementation guide. Some of them are testing of operative effectiveness of controls. This is, I think, when we are doing the IFC controls testing, then we can take the help of the internal audit report to see whether they've also tested the same controls and see whether they find any gaps in the controls. Physical verification of inventory, fixed assets, etc. Substantive procedures involving limited judgment. Example, testing of details, invoices, agreements, MOU. So the substantive procedures, if the internal auditor has looked at, then we can structure our own audit program to rely in some part on the internal audit function. If he has done the checking of the invoices, etc. Tracing transactions through the information system relating relevant to financial reporting. This, I think, is an extremely important step, that how does the transactions in the system finally become show up in the financial reporting structure of the company, and whether they are truly reporting what is in the books and where the entries are put, and they are transparently and clearly and reported in the financial reporting structure, and the flow of information is correct. This, if the internal auditor has checked the flow of information, we can rely on them for ensuring that yes, the system is working. Testing of compliances with regulatory requirements. This is, I think, a very standard internal audit process of statutory compliance, as we call it, and we can rely upon the internal auditor if his reports are comprehensively prepared and documented and checked, and we can then reduce the total processes that we are doing as external auditors to rely in some part over the statutory compliance checking done by the internal auditor. There are certain, again, the implementation guides also gives us some guidance on certain areas involving significant judgments where internal audit function cannot be used to provide direct assistance. And again, these are only indicative and not exhaustive. Some of them are goodwill impairment testing, business valuation testing, these involve significant amount of estimates in arriving at future cash flows, future earnings, etc. There exists significant judgment in arriving at weighted average cost of capital, WACC, growth rate in earnings, and perpetual growth rate. These factors significantly influence the net present value of discounted cash flow, which is tested against goodwill. So here, whether there are significant decisions to be taken and judgments involved, we should not rely on the internal auditor, but do our own processes and apply our own mind, as ultimately we are responsible for the financial statements. The management's note on different useful life, as in case the useful life of assets is different from as compared to Companies Act 2013, then management's opinion on the difference in useful life is an issue with the statutory auditor. External auditor has to apply his mind and take a decision on, and not rely on the internal auditor for this purpose. A change in accounting policy or accounting estimate is again a very significant aspect which goes to the root of the financial preparation of the financial statements. And here again, the external auditor cannot shift his responsibility to the internal auditor for taking a decision on forming a judgment on these issues. Setting an overall scope of audit procedures and adequacy of testing performed. So when we are planning the audit and deciding on overall scope of the audit procedures and adequacy of testing, we should do it independently based on our own assessment of the entity and not rely on the internal auditor for this purpose. Adequacy of disclosures made in financial statements. There exists a high level of judgment in determining whether disclosures are to be made in financial statements so as to give readers better understanding of the financial statement, and this responsibility remains with that of the external auditor only. In determining of a subsidiary by virtue of control by analyzing underlying facts and circumstances. So this is a very hot topic which is debated very regularly by all auditors, whether a subsidiary in IGAAP and Ind AS, there are different definitions, is a subsidiary which is under and by virtue of control or not, even if the shareholding is not there, and whether then consolidation takes place or not, and various disclosures of a subsidiary and company under control are there or not. So here again, the internal auditor work cannot substitute the judgment of the external auditor. So now we come to the second aspect of this essay, which is where the internal auditor can be used to provide direct assistance to the external auditor while doing the work of audit. The framework is in broad terms as under. The first step here is the external auditor needs to determine whether the internal auditor can be used to provide direct assistance in audit. For this purpose, the external auditor needs to evaluate the internal auditors with respect to threat to their objectivity. Objectivity is again similar to what we discussed earlier. And second, the level of competence of the internal auditor. Again, both these aspects we discussed earlier when we were looking at relying on the work of the internal auditor. The second aspect is, after deciding to use the internal auditors for providing direct assistance, the external auditor needs to determine the nature and extent of work that can be assigned to the internal auditor for providing direct assistance. So then once we are satisfied that there is objectivity, there is level of competence, then we need to decide what work we are going to assign to the internal auditor to facilitate and work directly as assistance to the external auditor. After deciding the use the internal auditor for providing direct assistance and also deciding the nature and extent of work to be assigned, the external auditor needs to obtain written agreements from the entity and the internal auditor. So this is extremely important. We need to have a written agreement not only with the internal auditor, but also with the entity being audited, that we are going to use the internal auditor to provide direct assistance to us, and these aspects are going to be done. The external auditor also needs to direct, supervise, and review the work of the internal auditor. So the external auditor cannot shirk his responsibility. After assigning the work to the internal auditor, he has to then continue to direct, supervise, and review the work of the internal auditor. The external auditor, with permission of the entity, may use the internal auditor to perform the assigned task under direction, supervision, and review of the external auditor. Sorry, I've already said that. The nature and extent of work that may be assigned to the internal auditor shall be limited to areas of minimal judgment, least assumptions, and where no significant estimates are involved. In the previous slides, we also discussed the areas where there are judgments involved, there are assumptions involved, where significant estimates are involved, which we cannot use the internal auditor's work. Similarly, in those cases also, we cannot assign those work for direct assistance to the internal auditor also. Some examples of areas where the internal audit function can be used to provide direct assistance are verification and documentation of samples selected for test of controls and test of details for substantive testing. So when you select a sample, you can ask the internal auditor to assist you in testing the controls for those samples and details for substantive testing. Verification and documentation of statutory remittance, challans, returns, matching with ledgers, statutory compliance, PF, ESI, GST, etc. We can ask them to verify the challans, payments, etc. Perform substantive analytical testing and ensuring that the differences are within threshold as set up by the external auditor. Perform process understanding with the client for the respective processes and documentation. Document the same. Perform walkthrough for process. So basically all these three things are on the processes check, that the processes are functioning and their processes are robust enough to give complete transparent financial results at the end of the year. Test and document the design factors of controls identified by the guidance note on audit for internal financial controls over financial reporting. So the testing of controls and RCMs can be done with the help of the direct assistance of the internal auditor. Areas involving significant judgment include impairment of goodwill, determination of subsidiary, where we have control provision of expected credit loss. We already discussed this. The only new one that is coming in is expected credit loss calculation. This again should be done independently by the external auditor. Areas involving significant estimates, including specific useful life of class of assets, cash flow, projection, etc. Obtaining external confirmations. Perform discussions on fraud risk in accordance with SA 315. Assessing and classification of risk identified in the entity and tailoring of appropriate audit procedures. When dependency on the internal auditor's work, the external auditor shall make significant judgments in audit engagement. Sorry. So basically what this slide is saying is that once the external auditor cannot reduce his level of work and his testing where judgments are involved in planning and performing audit procedures and evaluating audit evidence gathered in areas where higher the risk, assessed risk of material misstatement at assertion level, with special consideration given to risk identified as significant, the less the internal audit function, status, and relevant policies and procedures adequately support objectivity of internal auditors, and the lower the level of competence of internal audit function. So wherever there is the level of competence is lower, or the organizational status is lower, or the material assessed risk of material misstatement is higher, in all these three cases, there is there's more judgment involved in planning and executing the task. In all these three cases, the reliance of the external auditor on the internal auditor work will get reduced. The external auditor shall also evaluate whether in aggregate, using the work of the internal audit function or using the internal auditors to provide direct assistance to the extent planned, would still result in the external auditor being sufficiently involved in audit. I think this is the most significant line in the whole essay, that you have to, whether you rely on the internal auditor's work or you're using him as direct assistance, you have to continue to be sufficiently involved in the audit, given the external auditor's role and sole responsibility for the audit opinion expressed cannot go away by using the internal auditor's work. The sole responsibility of forming the audit opinion remains with the external auditor. So this, according to me, is the crux of the essay. And I will conclude by saying that the external auditor has the sole responsibility for the audit opinion expressed, and the responsibility is not reduced by the external auditor's use of the work of the internal audit function or internal auditors to provide direct assistance on the engagement. The nature and extent of work that may be assigned to the internal auditors shall be limited to the areas of minimal judgment, least assumptions, and where no significant estimates are involved. Nothing in this essay requires the external auditor to use the work of the internal audit function to modify the nature or timing or reduce the extent of audit procedures to be performed directly by the external auditor. It remains a decision of the external auditor in establishing overall audit strategy. So with that, my friends, I come to the conclusion of my presentation. If anybody has any question, I'll be happy to answer.
Yes, sir. Thank you so much, sir. Can you hear me, sir?
Yes.
Yeah, thank you so much, sir, for enlightening all of us on various parts relating to this using the work of the internal auditor. We are having a few questions relating to this. We already have so many questions relating to the using the work of other auditors. So first question is, are we to rely on the other auditors as well as the internal auditors report without doing any due diligence?
So I have already said that before we get into relying on the internal auditor's work, we have to do three things. We have to see the objectivity, the competence, and the systematic approach of the internal auditor. If all three are satisfied, then we can rely. And then once we get into the internal auditor report, we need to see their documentation, their backup, the way they have done the audit, and whether they have been independent in doing the audit. So relying is always with a pinch of salt. We do not shirk away the responsibility of doing a due diligence of the report to see whether we should be satisfied with the work of the internal auditor or not.
Yes, sir. Sir, do we need a certificate from internal auditor for the internal financial control and frauds, or it is sufficient for the statutory audit as the audit evidence and the reliance?
So once I'm doing the internal, let me divide this into two parts. The internal financial controls certification is the responsibility of the statutory auditor. He cannot give it away by saying that I will not do any checking and I have not checked it, but I am relying on the internal auditor's report to have checked the internal financial controls, or I'm taking direct assistance from him. He can look at their reports, he can see what they have done, and then do some, he can then reduce the substantive checking that he is doing, but he must still complete his checking on his own also. You are only relying on it to reduce some part of the detailed checking you're doing, and then you have to document to what extent you have relied upon the internal auditor's report and to what extent you have relied on the sample checking and RCM checking. So, but it does not mean you don't do it at all. Similarly, in case of fraud, since there's a material misstatement involved in case of a fraud, there the standard also says that in case of frauds, you should not rely on the internal auditor's report. You must do it full checking yourself.
But it should be documented and we have to be mentioned.
Yes.
Yeah. Yes.
Documentation is extremely important.
Documentation is important. Whatever we have taken from the internal auditor, whatever we are taking, it is to be documented that we have taken this sort of thing from the internal auditor.
That's right. Mere certification of the internal auditor is not enough.
Yes, yes. So if the statutory auditor does not look into the findings of the internal auditor while forming his opinion in his report to the member of the corporate or cooperative society, it is especially to the cooperative society, and whether he will be held for misconduct for not considering the finding of the internal auditor or not qualifying properly in his report to the member of the corporate or cooperative society or other stakeholders.
You see, the ultimate formation of an opinion is of the external auditor. How if he does not want to look at the internal auditor's report and there is some significant findings in the internal auditor's report, I cannot give a blanket answer that you should not have looked at it at all. Suppose the internal auditor reports say that there has been a fraud and that there has been misappropriation of assets and money and income, and the statutory auditor chooses completely to ignore it, then that is wrong. He must then go in, if there are some negative findings of the internal audit report, then he must go into it and then use his own substantive procedures to see whether he has applied his mind to it, he has done his checking, and if he still arrives at a conclusion that no, there is no such thing that he finds, then he need not give a qualification. He can over, but he has a document why he is saying so. He cannot ignore the internal auditors.
Yes, absolutely true, sir. Sir, thank you so much for sparing your valuable time. I know you were very busy and involved in the various audits as well as the bank audit compilation, and you have given your kind consent to spare valuable time today and give your expertise on this using the work of the other internal auditor. Thank you so much, sir. On behalf of AASP of ICI, I extend my heartiest thanks for sparing your valuable time and enlightening all of us on this. Thank you so much. Thank you, sir. Thank you, sir. Thank you. Moving on to the next technical session, we are having with us Utsav ji with us for the various intricacies of this using the work of the other auditor as well as the auditor's expert. So over to you, Utsav ji, for your deliberation, for your presentation. Over to Utsav ji.
Thank you so much. I guess I'm finally audible.
Yes, sir. Perfectly fine.
So I would like to first of all thank CA Sanjeev Singhal ji, the chairman, and CA Vishal Doshi ji, the vice chairman of the Audit and Standard Board of ICI. I would also like to thank CA Mangesh Banerjee for his keynote speech. And I would also like to thank Sandeep Dinodia ji for throwing the light upon SA610. His deliberation was very enlightening. I would like to share the screen. Is it visible to everyone?
Not yet, sir. Abhi it is visible. Word file, sir.
Yeah. It is a PDF file.
Yes, it is visible.
I'm taking it right from the standard itself.
Okay.
Yeah, there would not be any different PPT for it. It would be directly from the standard itself.
Fine, sir. Fine.
So we are covering two standards today, SA600 and SA620. The SA600 talks about the work of the other auditor. Here, we are starting with the SA600 and thereafter we will take you to the SA620, which talks about the work of auditor's expert, the outsider expert or the experts that the auditors engage. First of all, we need to understand the basic principle governing this standard. Where in the opening para itself, it writes when an auditor delegates work to an assistant or uses work performed by the other auditor and experts, he will continue to be responsible for forming and expressing his opinion on the financial information. However, he will be entitled to rely upon the work performed by the others, provided he exercises adequate skills and care and is not aware of any reason to believe that he should not have so relied. So here itself, it makes very clear that the ultimate responsibility be lying upon the auditor itself, the principal auditor, we say, for this accounting standard, we would say the principal auditor, the one who is supposed to audit the consolidated financial statements. So for this account standard on audit, there is one basic thing that the standard on audit applies on only when there is a consolidated financial statement. That means the entity is having more than one component. It may be called as a branch, a division, subsidiary, a joint venture, or an associate enterprise, as it has been given in the para 8 of the essay itself. So when a company is having components, more than one components, and the components are being audited by various auditors, so the principal auditor, who is supposed to audit the consolidated financial statements of the particular organization, or we can say the HO of the organization, who is compiling all the entities' financials to the main financial statements, and he is signing the audit report of that particular HO. He is supposed to use the particular standards on auditing. The principal auditor would mean, as written in the para 6, the auditor who is responsible for reporting on the financial statement of an entity as a whole. However, the auditor who is writing his report only on a component, let's say for the branch or for the division. The practical example would be like in the bank audits, there is one central statutory auditor and there are branch auditors who audits the branches. So in that particular context, you can understand the central statutory auditor may be called as the principal auditor, and the branch auditors who have been given the respective branches to audit, they can be called as the other auditors in this case. Okay? So yeah. So in the context of principal auditor, when we talk that there are other auditors also involved in auditing the components of a particular organization, the standards on auditing comes into the picture. The underlying responsibility of the principal auditor would remain the same. However, he can place his reliance upon the audit that has been conducted by the other auditors. He can use their work. Since the principal auditor cannot audit all the components of the particular organization, he cannot visit every branch, he cannot visit, let's say for the geographical reasons also, or for the extent of work also. For the banks, it is not possible for the principal auditor to audit all the branches, since there are 1,000 number of branches there in place. So the principal auditor has been given responsibility to audit only the head office and a few number of branches, let's say. The larger branches, and the other branches, they are being audited by the other auditors. So on the consolidated financial statement that consolidate all the financials, the principal auditor is placing his audit report. He can use the work of the other auditors, and he can place his reliance upon the audit reports of the other auditors. And this standard, it does not deal with the joint auditor. Joint auditor is different from the principal and other auditor. When a particular organization is being audited by two auditors together, where they differentiate amongst them the area of auditing, then it is called a joint auditor. However, when the branches are being audited by the other auditors and the consolidated financial statement is being audited by the other auditor, then in that case, it is called a principal auditor and the other auditor. So it is not just about the components. In the joint auditor, it is not about the components. They divide upon the area of audit of the complete consolidated financial statements. So this particular accounting standard on auditing does not deal in case where there is a joint auditor, and it deals only with the principal auditor and the other auditor. So the responsibility of the auditor shall remain the same with the principal auditor as is that of the other audits. We say the para 3 that deals with only the it talks about that what I have just said, that it does not deal in case when there is a joint auditor, and nor it deals with the auditor's relationship with the predecessor auditor. Right. So the principal auditor concludes that the financial information of a component is immaterial, and the procedure outlined in the statement do not apply when the principal auditor believes so. However, when several components which are immaterial and they come together and makes itself a financial information of the entity as a whole, the procedure outlined in the statement should be considered. Like for let's say for a smaller branch, let's say if a particular amount of fee that has been given to a consultant, which is very immaterial, and the invoices are not available. I'm taking a practical example, and the auditor of that particular component has in his audit, let's say he has pointed it out separately. Similarly, the same professional has been given the charge of various other branches, and again, the fee is very small in amount. However, the consolidated fees that comes out to be a little material when it comes in context with the total financial statements. There again, it should be this particular essay should be considered. The principal auditor used the work of the other auditor and should determine how the work of the auditor will affect the audit report. That we will study in this, how the particular audit report will affect the audit report. Again, the definitions of principal auditor, other auditor, and the components that I have already dealt with. Acceptance of as a principal auditor. The auditor should consider whether the auditor's own participation is sufficient.
Please note, the meeting is not encrypted.
Hello? Yeah?
नहीं ये कोई और जगह लग गया है.
Hello? Yes. The auditor should consider whether his own participation is necessary, the principal auditor's participation is necessary, and to decide upon whether it is necessary, he would understand about the materiality of the portion of the financial statement to which the principal auditors audit. The principal auditor's degree of knowledge regarding the business of the component. There may be different components, and the JVs may be entered into different, let's say, different sectors. And principal auditor needs to determine if he is competent enough to audit the other components financials, and if he does not find himself competent enough, so he may rely upon the other auditor's report onto it. And the risk of material misstatement, that is most important here. If he believes that there may be a risk of material misstatement in the financial information, so he may engage his team also, he may engage himself also to do the substantive audit procedures onto the part of the component and performance of the additional process, as I said earlier. And the principal auditor's procedures in para 10, it states that he is also authorized to visit and examine the books of accounts. So here, the standard is laying down one basic notion that the principal auditor is free to look into the books of accounts, visit the branches himself, do all the audit procedures that he may require to do to get the assurance that the other auditors, they are also doing their job in the fine tuning. Right, the other auditor will submit their report to the principal auditor. However, principal auditor, in case they feel like there must be a special, let's say, consideration over certain special areas, and there must be some extensive audit procedures be applied upon certain areas, and or there is a timeline within which the audit should be completed, or let's say there is a particular format of audit report that should be presented before them. He can ask the other auditors to look into it and to comply with it. However, principal auditor himself is also, if he finds himself competent and if he finds that there is material risk of material misstatement, he can also break through the branches, and he can also visit the branches. He can look into the books of accounts, and he can get the complete access of all the data he needs for the auditing. Because at the end of the day, the ultimate responsibility that completely lies upon the principal auditor. Even if he is, let's say, the principal auditor has taken the audit reports from the other auditors, and he has seen their work, and he has asked for the data in a particular format. Let's say in a questionnaire format, he has asked for certain details, like how you performed the audit or what was your audit plan. So one thing to be noted here is that in the standard itself, it says that he can look into the data or look into the process that has been applied, but he cannot obtain the working papers of the other auditor. So here he can ask for the information in a particular format, or let's say in a form of questionnaire, but he cannot ask for the working papers of the other auditor. So this needs to be very clear here, because sometimes we mix upon the things that he can also obtain the working papers. He can obtain the audit plans. So he cannot obtain the working papers. That needs to be there with the other auditor only. However, he can ask for as many information as he may require in order to rely upon the information that has been, or to rely upon the audit report, I would say, that has been submitted to him. Also, there would be chances when, let's say, in my practical experience, I tell you that I was auditing a PSU, and there were some foreign subsidiaries. And in case of foreign subsidiaries, you get to see their financial statements, but you can't easily get the auditor's report. And if it is the auditor's report, the auditor's report are given separately. They sometimes in UK, I tell you precisely, they do not even sign the financial statement. So it is very hard to rely upon the very fact that if the financial statement given to us is the same financial statement as it has not been signed by the auditor. So there you have to apply some extensive audit procedures, like in order to understand if the audit has been done correctly or not. Other thing is that in case of foreign subsidiaries, or let's say, because they are not part of the Institute of Chartered Accountants of India. So there you also have another question upon the nature, time, and extent of the audit procedures that had been applied. What was the substantive audit procedures that they might have applied, or how would they have seen the financial statements? So that again is a question. So in that case, the principal auditor has to extend the substantive audit procedures, and he'll have to work a little more upon it. And this again becomes his call that he wants to rely upon the financials or not. Similarly, if the auditor is also a part of ICI, so there are lesser chances that there would be, I would not say lesser chances, or there would be a little more comfort. Rather, we belong to the same fraternity. We do the audit with the same standard and audit. So it gives a little comfort, a more comfort on using the work of the member of ICI, let's say, rather than having been relying upon the work of the other auditors. So that happens majorly in case when the financials are from the, let's say, foreign subsidiary or foreign entities or joint ventures sometimes. So this para 11 also talks about the same, that when planning the use of the other auditor, the principal auditor should consider the professional competency of the audit auditor in the context of specific assignment. Let's say for the specific assignment means the specific financial statement of the component. And if the other auditor is not a member of ICI, it becomes more like the procedures needs to be applied onto it, which must give a reliance upon the financial statements, and it gives you a confidence that you can rely upon the financial statement audited there. So in the para, the principal auditor should perform the procedure to obtain sufficient and appropriate audit evidence, like I have been saying before, that the work of the other auditor is adequate for the principal auditor's purpose. The principal auditor's purpose is to ultimately give an opinion upon the consolidated financial statement of the company. So he needs to be very cautious upon the very fact that the sufficient and appropriate audit evidences have been gathered, and the work has been performed, the procedures have been performed, which are in line with the standard on auditing, and they are good enough that a reliance can be placed upon it, and nothing that affects the materiality or that may modify the opinion is actually happening at the back of it. So while using the work of the other auditor, the major things that needs to be kept into the mind by the principal auditor is that the method to identify the intercompany transactions, these must be very clearly communicated. The special instruction, if there is any, in relation to checking some particular transaction, let's say, or let's say for the stock, or finding some other, because let's say in case of a head office, or in case of the one component, the principal auditor has found that the main company, the principal auditor has found that there was some misstatement in relation to the stock when they verified it physically. So the principal auditor can also communicate the very fact to the other auditor that in case when you are doing the audit of stock in particular, let's say, you must throw some extra efforts onto getting the stock physically checked and going deep into it. Rather than doing a test checking, you must better do a physical checking, and you must apply some more procedures onto it. So to get a very let's say realistic picture of the stock that is there. So like this, you can give the principal auditor can give the extra instructions to the other auditor, and so the areas that require special consideration would also be covered. Again, the procedure for identifying the intercomponent transaction, that is again very much important, because sometimes the intercomponent transaction happens and it does not get into the picture because it is the interbranch adjustment, or let's say it is the investment that is plainly appearing in the books of accounts, and it does not show that it is into the subsidiary or the share capital that is coming, or such kind of a transaction element could be there. So the principal auditor can also give the understanding upon the same to the other components auditors, the other auditors as we say. And again, the timetable under which the audit should be completed, you must have had attended the meetings by the CSA various number of times when the audit starts. Even before that, that the timeline must be adhered to, the audit has been assigned, the document should have been reaching you, and you must complete and submit your audit report within 7 days of giving the allotment, or let's say by 7th or 10th or 11th of the first week of April itself, sometime. So the time frame must be given, and the audit report format has also been sometime given, or the formats for giving your audit plans have also been given to. So the principal auditor can give that as well. Just he's doing all such things just to place his reliance upon the auditor and the work that has been performed by the other auditor. So he might discuss, the principal auditor may discuss with the other auditor the audit procedure that has been applied and review the written summary. Here, that was I have already explained you this, that he can review the summaries, but he cannot obtain their working papers. The working papers shall be with the other auditor itself. So he can discuss, he can see what the written summary is for the other auditors, how the other auditor has placed his reliance upon various facts, how he has checked what was the checklist of the other auditor, and what were his findings, and he can ask for the same in questionnaire format or checklist format, and what was the nature, time, and extent of the procedure that have been put into for taking the other auditors audit report, and what is the knowledge that has been enhanced from the review of the previous auditor work of the other auditors. So you can all look into it. And then principal auditor may conclude that it is not as necessary to apply the procedure such as those described in para 13 because sufficient and appropriate audit evidences previously obtained that acceptable quality control procedure, policies and procedures are complied with the conduct of the auditor's practice. So yeah, if the auditor is also a member of ICI, so the principal auditor may cut short all these, let's say, the checklist and the questionnaires that he is raising, or the questions that he is raising upon the nature, time, and extent. He can plainly rely upon it. But having said that, the ultimate responsibility is there with the principal auditor. Again, if the principal auditor is, let's say, not comfortable with the audit report that has been submitted, based on his own observation, he might have visited, or he might have also run some extensive substantial audit procedures onto the audit of the component, let's say, or the principal auditor must modify his opinion, and he must, in the other matter para, he must write it down separately that the particular division or this particular subsidiary that financials have been consolidated there with the principal entity, they have not been audited by us. He must write it there itself. So the principal auditor should consider the significant finding of the other auditor. It must be there that the other auditors, if they have reported certain facts to be significant, and in their audit report they have modified the audit report. So the call again lies with the principal auditor that if he is also looking into the materiality of the fact, he is also supposed to modify the opinion based on the opinion of the other auditor, or he is giving a clean opinion upon it. So the principal auditor must give a significant, must consider the significant findings of the other auditor while he is framing his own audit opinion. He needs to look into the materiality, the audit procedure, how it had been applied, and then he should decide upon it. The principal auditor may also consider it appropriate to discuss the other auditor and the management of the component, the audit findings, or the other matters affecting the financial information of the component. So he can also talk to the management and the other auditor of all the components that he may find may impact his opinion on the consolidated financial statement, let's say. So he may also decide that the supplement test of records of the financial statements of the components are necessary. Such tests may depend upon the circumstance be performed by the principal auditor or the other auditor. So likewise, I have already told you, he can also ask the other auditor to do some extra procedures in order to frame his own opinion. In certain circumstances, when the auditors may happen to the person other than a professionally qualified auditor, this may happen, for instance, where the component is situated in the foreign country and the applicable law permit a person other than a professionally qualified auditor to audit the financial statement of such component. In such circumstances, to 16 assume added importance. Likewise, I have said that if the auditor is also a part of the ICAI, the reliance upon the audit report of the other auditor shall be easier. However, the same example I have already said, if the auditor is not a part of ICAI and by law, the other person is doing the audit of the component of the company, so he must do the extra. The principal auditor must do the extra procedures, and they are important from as it has been said in 10 to 16 increases itself. So the next that I talked about the working papers, like I have already told, he can review the working papers of the other auditor. He can ask in form of questionnaire about the plan that had been put in place for auditing, the procedures that had been applied, a specific procedure that needs to be applied for certain areas. However, the principal auditor cannot ask for having the custody of the working papers of the other auditor. The auditor shall remain the working document for his own. The principal auditor needs not document. Am I audible now? Yeah. I guess I was also audible previously. I have almost taken the session half through. It goes well now. Okay. So yeah. So there must be a clear coordination between both the auditors. The principal auditor must coordinate with the other auditors in terms of when he requires the other auditor to do certain specific procedures in a particular area of the component, and whatever exchange of documents there or whatever their exchange of information is there happening, it must be passed through only a written medium, and it must be documented. And the auditor, the other auditor, knowing the context in which his work is to be used by the principal auditor, should coordinate with the principal auditor. The example has also been set in the essay itself that by bringing the principal auditor's immediate attention to any significant finding required to be dealt with at the entity level, adhering to the timetable for the audit of the component, etc. All these things must be coordinated well between the other auditor and the principal auditor. Likewise, we also do in the bank audit sometimes that we find certain irregularities in some accounts. However, due to technical reason, those accounts shall not fall under the caveat of NPA, let's say. However, in the LFAR, we get a chance to write about them, or sometimes we also report it to the Central Statutory Auditor directly. We also write it in our report, and the Central Statutory Auditor are also given a right to have a call upon the classification of the accounts. So such all coordination must be there in place. And it should also ensure that the compliance with the relevant statutory requirement. Similarly, the principal auditor should advise other auditors for the matters that come to his attention that he thinks may have importance bearing on the other auditor's work. The example that I set right now fits to the situation completely, that whatever he thinks that this particular account shall not fall under the category of NPA as per the RBI guidelines. However, the account is not functioning well, or it has been dressed up in a way to get it out of the caveat of NPA. So it must be reported in the LFA, or it must be reported in the other in the audit report itself, rather giving it a special mention. And the principal auditor, or in case of banking, the central statutory auditor must be given a chance to understand about the account, or they must be gaining the knowledge of it. Reporting considerations. When the principal auditor concludes based on his procedure that the work of other auditor cannot be used, and principal auditor has not been able to perform sufficient additional procedures regarding the financial information of the component audited by the other auditor, the principal auditor should express a qualified opinion or disclaimer of opinion, because there is a limitation of the scope of the audit that we already understand. However, if there is any kind of limitation, the report must be qualified. And in the present case, if the principal auditor is of the opinion that the other auditor's work cannot be used, like in the case that I just spoke about, in case of a foreign entity where the financials were not signed by the auditor. And similarly, if let's say if in the requirement of that particular country was that the financials of the foreign entity do not qualify to be audited by an auditor, and they are just management signed auditor, and you cannot visit that place due to COVID, and you cannot even get the books of accounts, and there may be any issues that you are not getting a complete access over the books of accounts of that particular component. So you must qualify the audit report, and a disclaimer should be given regarding this. And in all circumstances, if the other auditor issues or intends to issue a modified auditor's opinion, the principal auditor should consider, I have also spoken about this before, consider whether the subject of the modification of such nature and significance in relation to the financial information of the entity on which the principal auditor is reporting, that is requires a modification of the principal auditor's report. Right. So similarly, if the audit report has been modified by the other auditors, the principal auditor need to give this into the consideration. And the essay talks about the division of responsibility. The principal auditor would not be responsible in respect of the work that has been entrusted to those other auditor, except in the circumstances which should have aroused his suspicion about the reliability of the work performed by the other auditor. So it's not as such like for the subsidiary or for the branch, he is not the principal auditor is just consolidating his opinion into the opinion of the entity as a whole. The auditing let's say responsibility was that of the other auditor itself. So the work that has not been done by the other auditor, if that work, on that work, if let's say the principal auditor has relied upon and he has placed his, let's say, opinion based on the other auditor's report, the other auditor reports in the future found to be incorrect. So the other auditor would be responsible for whatever report that he has given, and he should be prosecuted for this. And if the auditor other auditor's report was clean and there was that which the principal auditor would place his suspicion onto his audit report, so the principal auditor would not be held responsible for it. So when the principal auditor has to base his opinion on the financial information of the entity as a whole, relying upon the statement and the reports of the other auditor, his report should state clearly the division of responsibility of the financial information of the entity by indicating the extent to which the financial information of the component audited by the other auditor have been included in the financial information for the entity. Example, the number of division, branches, subsidiaries, or the other components audited by the other auditor. This is what I spoke about before. In the other matter para, as per essay 706, it writes that the principal auditor must write about how many branches and how many subsidiaries, joint venture balance sheets have not been audited by the principal auditors. It must be clearly mentioned. So the context of 25th para is coming from the context of 24th para itself, the responsibility of the principal auditor. So this ends the essay 600. Any questions onto this essay would be welcome now. After that, we will move on to the essay 620, the work of an auditor's expert. Any questions on this? Yeah.
Sir, there is some technical problem in the mic. We will take the questions at the end only.
Yeah, okay, no problem.
All the questions we will take at the end only.
No problem.
Okay, sir. Okay, sir.
Yeah. So I'm continuing with the essay 620, the work to be used by the auditor, of the auditor's expert. Let me just share the screen. Again, I would be taking it directly from the standard itself. And however, we will not be taking the application of and the other elementary explanatory material onto this particular essay. Give me a minute. So this again is a very relevant essay. We deal with this essay in almost every audit that we do. Since the auditor's expert, they are required for almost each and every balance sheet. They try to calculate the deferred tax liability, the calculation of provision for income tax that we sign the balance sheets, having the component added. So this particular essay is very practical, and that is being used everywhere. I'm unable to see the screen. Yeah. I guess my screen is appearing now. Yeah. Okay. So let us first understand about the scope of this standard on auditing. So this standard on auditing it deals with the auditor's responsibility regarding the use of an individual's or an organization work in field of expertise other than that of accounting and auditing. So whenever we are engaging any professional, we here means the auditor is engaging any professional who has an area of expertise other than that in accounting and auditing. This standard work of an expert comes into the picture itself. So expert is defined here in two parts. One is when the expert who is having an expertise in the area of auditing and accounting, who has not been engaged by the auditor and who has been engaged by the management itself, he would be termed as the management expert. So in para 2b, the definition, the auditor's use of the work of an individual or an organization possessing expertise in field of other than accounting or auditing, whose work is in that field is used by the entity to assist the entity in preparing the financial statement as a management expert, which is dealt with SA 500. So here, whenever an expert who is having expertise in field other than accounts or auditing is engaged by the management, shall be termed for the purpose of preparing the financial statement would be termed as the management's expert. And this SA does not deal with the management's expert, that is being dealt in SA 500. So what can be the best example? The actuarial valuation of the gratuity provision that we get done, or such provisions that we get done, if it is being done by, if we are accepting the valuation by the LIC, let's say, or some actuary, let's say if we have our own trust. So in that case, the management is engaging those experts. The management is engaging the actuarial valuer. Or let's say if it is a valuation of the, let's say, the market valuation of the land and property, and the management is let's say is increasing the valuation of the land and property in the books of accounts. So in that case, the management has engaged a valuation expert. Rather, this would be term who is not belonging to the field of accounting and auditing. He is a valuer. He is purely doing the valuation of, let's say, securities and financial assets, or land and property, or the building, or the gold, or anything else that they have. Such kind of valuers who are not dealing with the accounts and auditing, they are not expert in that field, would be termed as the experts. And when the management engages them, it is called the management expert. However, the situation when the engagement team, the team of the auditor, includes a member with expertise in specialized area of accounting or auditing, that particular expert who is from the team of the auditor itself, that is also not dealt here in this accounting standard. That particular expert is dealt in SA 220. So in para 2A, situation where the engagement team includes a member with expertise in specialized area of accounting or auditing. Here in the other definition, you see, in a field other than accounting or auditing. When we talk about the expert, it is the person who is not expert in the accounting or auditing. However, in the first para 2A, who has also been excluded from this standard, is the situation where the engagement team includes a member with expertise in specialized area of accounting and auditing. Since he must, the people who have been included in the team of auditing, they must be specialized in accounting, preparing financial statement, and auditing the same. So it is apparent that the person who has been included in the team itself is the member, and itself is an expert in accounting and auditing. However, they are not being dealt by this standard on auditing. This particular standard excludes them, the management's expert and the experts in the specialized area of accounting or auditing. Let's say we have in the audit team, we also have a member who is specialized in the direct taxation, who would be taking care of the charge of, let's say, evaluating the provision for taxes or the deferred tax asset and liabilities. So that particular person is also part of the accounting team. So here, that particular person is not an expert in accounting and auditing, we can say. So that auditor's expert is being dealt here with. However, if the person is an expert in the field of accounting or auditing and a part of the audit team, he is dealt in SA 220. So this must be made very clear. So the audit party, if there is a person other than the accounting and audit expert, he must be dealt as a auditor's expert. So in context of the management experts definition, I would also like to add here, the definition remains the same. The person who has been engaged by the auditor itself, who is not an expert, who is expert in the field other than auditing or accounting, and his work is to be used by the auditor, that particular person is known as the auditor's expert, and this particular essay talks about only the auditor's expert. The auditor's responsibility for the audit opinion, no matter whatever opinion of the auditor's expert be, whoever the auditor experts be, the final responsibility onto expressing the opinion upon the financial statement on the matter that has been looked upon by the auditor's expert lies only and only with the auditor itself. The auditor has sole responsibility for the audit opinion expressed, and that responsibility is not reduced by the auditor's use of the work of an auditor's expert. Nonetheless, if the auditor using the work of an auditor's expert, having followed this essay, concludes that the work of the expert is adequate for the audit purpose, the auditor may accept. Please note that the word here is may. The auditor may accept the expert's findings or conclusion in the expert's field as appropriate audit evidences. So he can rely upon the work when he believes, the auditor believes that the work of the auditor's expert is good enough to be relied upon, and it has been conducted in the manner as is. It gives a comfort to the auditor that his audit plan was correct, the evidences were correct, the assumptions were correct, the proper documentation has been done, and basis on that, the auditor's expert has framed his opinion to give a clear picture upon the particular area. Then he can only use it, right? The effective date is from 1st April 2010. The objective of the auditors are to determine whether the use of the work of an auditor's expert, like he has to first determine whether to use the work of an auditor expert or not. Since the auditor is not expert in area other than the accounting and auditing, let's say, and he believes that he needs another opinion upon, let's say if there is a suit, and the management has got this lawyer and they have got him evaluating the contingent liability, and the auditor believes on his experience that, see, I'm not the auditor is not let's say the competent person to evaluate the underlying risk in the contingent liability. However, he believes that whatever valuation that the company has shown is not good enough, and it is undershowing the liability. So the underreporting is there. So the auditor may engage another lawyer, would be termed as the auditor's expert, for determining the liability, the contingent liability, again to look into the case and determine and give an assurance to the auditor that this particular amount that the management has given is correct or not. So he first has to understand whether to use the work of an auditor's expert or not. Or let's say if there is in the audit team, there is one partner, let's say, or the team member, let's say, he is also a lawyer, and he has in his past experiences, he has seen such cases where his work can also be used. He is also competent enough to do the audit, so that is why he is a part of the team, and he is also making the financial statement, so he's also good enough in the account. So can the auditor place his reliance upon the opinion that the person in the team itself has made regarding the claim of the company, let's say, or the amount that has been disclosed by the company as a contingent liability, or the management's expert's opinion? Yes, the auditor can rely upon into it as well. So in case when the auditor finds it difficult to place a reliance upon to what the management has stated, then he can always use the work of the auditor's expert. If using the works of an auditor's expert to determine whether the work is adequate for the auditor's purpose, again the same thing that we had been talking about. So the objective are to determine whether the use of an auditor's expert, whether to use, is it required, is the team not competent enough to express opinion upon a particular thing, and if the work of the auditor's if using the work of auditor to determine whether that work is adequate for the auditor's purpose. So pehle to whether it is required. Second, if it is required, whether it would be adequate for auditor's purpose or not. So these are two objectives here. Auditor's expert, as I have explained, an individual or an organization possessing expertise in field other than accounting and auditing, whose work is in the field, is to be used by the auditor to assist the auditor in obtaining sufficient and appropriate audit evidences. An auditor's expert may be either an auditor's internal expert who is partner or staff, including temporary staff of the auditor's firm or the network firm, or an auditor's external expert. It can be external, it can be internal as well. They both would be termed as the auditor's expert. However, if the person is knowledgeable in the field of accounting and auditing, he would not be termed as auditor's expert. Expertise, the skill and knowledge, the experience in a particular field. The manager expert, again, just like if the person has been engaged, the expert has been engaged by the auditor, it is auditor's expert, and it has been engaged by the management, it would be management's expert. For requirement, the determining the need of an auditor's expert. This again, the auditor needs to determine why there is a need. So if the expertise in field other than accounting and audit is necessary to obtain sufficient appropriate audit evidences, the auditor shall determine whether to use work to an auditor's expert. You can see in para A4 to A9, there a complete explanation has been given in relation to the determining, and there a step-by-step guide has been given whereby auditor would determine based on these principles whether auditor's expert is required or not. So auditor expert may be required to assess the auditor itself. Why would they may be required? So auditor may be required to obtain an understanding on the entity and its environment and its internal control, to identify assessing the risk of material misstatement, determining and implementing overall response, then designing and performing further audit procedures to respond to the risk if the auditor feels that there is a risk, there exists a risk. Just like I set an example for the contingent liability, that it's not much of a risk, but yeah, if we underreport the contingent liability, the stakeholders may decision may impact. Like designing and performing further audit procedure to respond to the assessed risk that may come, and evaluating the sufficiency and appropriateness of the audit evidences obtained in form of an opinion on the financial statement. Then risk of material misstatement. If the auditor believes that there is a risk of material misstatement that may come, in case the auditor is not competent enough to express an opinion upon, he can engage the auditor's expert again. If the preparation of financial statement involves use of expert in a field other than accounting and auditing, who is skilled in accounting and auditing, may not possess necessary expertise to audit those financial statements. The engagement partner is required to be satisfied that the engagement team and any auditor's expert who are not part of the team collectively have appropriate competence and capability to perform the audit engagement. It is very much necessary. Again, the evaluation of the very fact that whether the auditor's expert is required or not is based upon the circumstances, the qualification and skill of the audit team, the audit partners, collectively, if the team is not capable enough to give an opinion upon the particular, let's say, on a particular circumstance, underlying circumstance, there are certain things, and the auditor does not feel it comfortable to express an opinion upon that particular part. So he can always call for an auditor's expert's opinion. And again, I would like to say it is not necessary if the auditor's expert has given an opinion to take that opinion into the audit report or to completely rely upon that auditor expert's opinion. At the end, the responsibility over the financial statement would be that of the auditor itself. So he has to decide himself, and it is not a pure luck game that he has to take a chance upon it. He has to follow complete procedure as per this standard. He has to see how the audit has been done, how the assumptions have been taken, what was the professional integrities of the auditor's expert that has been given. So based on that, the auditors can decide upon whether they have to take the opinion of auditor's expert or not. Again, coming back to the essay. Nature, time, and extent of the audit procedure. The nature, time, and extent of the audit procedure with respect to the requirement in para 9 to 13 of the essay will vary depending upon the circumstances. in the para 9 to 13, we will discuss upon the NTE or the substantive audit procedures that we say that may be required. And so this para talks about the particular nature, time, and extent that may be required for relying upon the work of the other auditor. So the nature of the matter to which that expert's work is related, this is one thing. As we had been talking, again, in the examples I have already set you, the risk of material misstatement in the matter to which the expert's work relates to. If we do not use the work of the expert, what would be the risk of material misstatement that would impact the auditor's opinion? The significance of that expert's work in context of the audit. It should be given a complete understanding that, let's say, the auditor's expert should not be engaged for the immaterial findings. Let's say if in a practical case, if we see that in case of proprietary of a formula, let's say, and the formula needs to be patented, and the company is delaying upon the patents, and in the audit, if we find that had this particular formula been patented, there would have been a multi-dollar gain to the company in terms of royalty that may come from that particular formula. And to determine that, we have engaged some expert from the field of research, and they have figured out that this formula is completely proprietary. And so here, if you see the situation that the auditor is not doing a proprietary audit in that particular case, here he is doing the statutory of that particular organization. So this can be a matter that can be brought by the management to the AGM or by the other independent directors to the board. However, for the auditor to talk upon this particular formula should have been patented, seeing the proprietary of the formula. And we have already conducted a study upon engaging some XYZ experts into your company, and this actually does not make any difference onto the financial statements of the organization. These are the future gains that might have occurred if this particular action had been taken. So this all is completely different from what the context of statutory audit is. So this is again, this part C of 8 is also saying the same. In the context of audit, the significance of the expert's work must be taken care of when the auditor's knowledge and experience with the previous work performed by the expert. So the expert, if he has been engaged in the other audit assignments, so that would again become a significant part. Or let's say for the same audit, the same expert had been engaged by the management itself. So again, this would be a point of consideration for the auditor if he finds that. Whether the expert is subject to auditor's firm quality control policies and procedure. This is a very important point. Here we will see para A11 to A13. Since they are the external experts and we are binding our audits through the standard of auditing. However, we do not know if the coming expert is also binding through any such standards of doing their job or not, or they are just so it is very difficult to rely upon their work. So we need to look into the quality of their work, how they have been conducting their job, and what kind of assumptions that they have taken, what are the working papers, what could be the calculations. So like all this thing. So let us see the A11 to A13 here. So this gives a, like we said, this gives a good understanding upon how to use these standards practically. So auditors firm quality control procedures, policies and procedures. The auditor internal expert may be a partner or staff, including temporary staff or auditors firm, and therefore subject to the quality control policies and procedures the firm in accordance with the standard of quality control 1. Alternatively, an auditor's internal expert may be partner or staff, including temporary staff, which may share common quality control policies and procedure with the audit firms. So it is very clear if the internal expert is there, and so he must be binding upon the quality and control policies that we might have applied onto our audit firm. The auditor's external expert is not a member of the engagement team and is not subject to the quality control policies and procedures in accordance with the SQC1. Some law or regulation, however, may require that an auditor's internal expert be treated as member of the engagement team and may therefore be subject to relevant ethical and other professional requirements, including those relating to independence as determined by such law and regulations. So here the question is, what are such laws? The relevant ethical requirement ordinary comprising to the code of ethics of the Institute of Chartered Accountant of India related to an audit of a financial statement. So we must look into the fact that the auditor's expert that we are engaging, he must also adhere to the guidelines as being laid down for the ethical requirement in the code of ethics of ICAI in relation to the audit of the financial statement. And in A13, it talks about the engagement teams are entitled to rely on the firm system of quality control unless information provided by the firm or the other parties suggest otherwise. So engagement team should rely upon the firm's quality control. However, if there are some other informations available that the quality is being breached at some places, so there may be extra procedures that can be applied. The extent of that reliance will vary upon the circumstances and may affect the nature, time, and extent. Again, I told you the nature, time, and extent of the auditor's procedure with respect to such matter. These methods are competence and capability through recruitment and training program. Objectivity, auditors, internal experts are subject to relevant ethics requirement, including those pertaining to independence. The auditor's evaluation of the adequacy of auditor's expert work. For example, if the firm is training program may provide auditors internal expert with an appropriate understanding of interrelationship of these experts with the audit process. Reliance on such training and other firm process such as protocol for scoping the work of the auditor's internal expert may affect the nature, time, and extent of the audit procedure. So if they are well trained and they understand their job, so the NTE would already come downwards, like you the auditor shall rely upon their work more like if they are very much trained. However, if the internal expert is not trained in itself, so however he is expert in the field itself, but he's not trained in doing the audit as per the quality control standards that we have. So there shall be a higher extent of nature, time, and extent that needs to be applied upon. Adherence to the regulatory and legal requirements to monitoring the process. It must be that the expert must engage to the regulatory requirement. He should not collude with the management, or he should not take such actions that may raise a question upon his independence. And agreement with the auditor's expert, which is very much necessary. An agreement must be there in the place. So we'll talk about this also here in the main standard itself. Competency, capability, and objectivity of the, I'm sure I'm not missing out anything. Yeah. The competency, capability, and objectivity of the auditor's expert. The auditor shall evaluate whether the auditor expert has necessary competence. So it is a must thing that needs to be taken care of even before giving any assignment to any expert. That the expert must be competent. He must be capable enough to do his job, and his job is actually matching to the objectives of the final audit report that we are making, and it should be relevant to him. And in case the auditor's external expert, the evaluation of objectivity shall include inquiry regarding the interest and relationship that may create threat to the expert's objectivity, the independence that we again talked about. Obtaining an understanding of the field of experts and expertise of the auditor's expert. The auditor shall obtain a sufficient understanding of the field of expertise of the auditor's expert to enable the auditor to determine the nature, scope, and objectivity of the expert work for the audit purpose. It is very obvious if we know about their understanding and if we know about their field, and if we can also help them out, the auditor can also help them out and help them in determining the nature, scope, and objectivity of their work that needs to be done, so that the work is being done only in the direction that it can be used by the auditor in framing his opinion, and evaluate the adequacy of the work. We need to evaluate upon what kind of work that has been done. Again, like what we said, the formulas used in the Excel, or because they may be expert in using their doing their job, but they may not be expert in putting numbers onto the places, or the assumptions, as we say, they may not be very much expert in putting unrealistic assumption into the places. So we need to look upon that as well. Agreement, again, that we just spoke of, the agreement with the auditor's expert. The auditor shall agree in writing, when appropriate, of the following matters with the auditor's expert. First is the nature, scope, and objective of the expert's work. What is going to be the nature of job, what is going to be covered in the scope, and what is going to be the objectives of the finding that are being used. Because it should not be like, expert must not be engaged for any objective that is not their use for the purpose of the audit, because it will sometime it will not only hit on the pocket of the auditor, but also hit upon the timelines that has been given to us. Then respective roles and responsibilities of the auditor and that expert. The roles and responsibilities must be very clearly communicated, and they should also be clearly communicated. The outcomes must be used for the audit purposes only. So the nature, time, and extent of communication between the auditor and that expert, including to form any report to be provided by the expert. So the auditor can also give certain formats, just like in case that we have read in case of other auditor. The auditor can prescribe the forms that this particular audit report must be submitted in this particular audit report paras, or let's say this particular questionnaire must be filled in, and the data must be given. So when we talk about the other auditors, the working papers of the other auditor can be seen but cannot be obtained. However, in case of auditor's expert, the working papers can be seen and can be obtained as well. So this is the basic difference between auditor's expert and the other auditors. Evaluating the adequacies of other auditors' work. This is, again, we need to evaluate how the work has been done. That had been completely stressing upon since the beginning of this essay, that they may be expert in their job, but ultimate responsibility is that of the auditor itself to either place his reliance upon the work of the auditor's expert or not to. And the auditor must ensure that all the factors around have been taken care of. A complete substantive audit procedure has been applied. The nature, the time, and extent was sufficient to get the knowledge upon the subject, and there is a complete reasonableness and relevance to the audit report of the finding of the auditor's expert, which adds on to the let's say the ultimate framing of the audit opinion. If that expert works involve use of significant assumptions and method, the relevance and reasonableness of those assumptions and method in the circumstances must be understood. If experts' work involve use of source data, that's significant, and experts' work, the relevance, completeness, and accuracy of source data must be found. It should not be that the data has been found from Google somewhere. No, the auditor expert must communicate with the auditor itself in case they need any data from the company, and the data must be provided to them from the direct source or the authenticated source, let's say. Right? If the auditor determines that the work of auditor's expert is not adequate for the auditor's purpose, the auditor shall agree that the expert on nature and extent of further work to be performed by the expert perform further audit procedure appropriate to the circumstances. So if in the primary findings, or let's say in the final report, it is not sufficient enough, that auditor does not find in his comfort to rely upon the outcomes of the external auditor's expert, he can again ask, and he should again ask the other expert to do the extensive substantive procedures and increase the nature, time, and extent of the audit, and look into the things with the other angle, so that could contribute to the audit report in end. And reference to the auditor's expert in the audit report. The auditor shall not refer anywhere in an auditor's report containing an unmodified opinion unless the law require. And if such reference is required by law, the auditor should indicate in the auditor's report that the reference does not reduce the auditor's liability for the audit opinion. So ultimately, the auditor's liability in relation to his opinion is that of his own. That cannot be shared in case if it is an unmodified opinion. So he first should restrain from writing the name or should writing about the expert's opinion. In case by law it is required to write upon it, it should be clearly communicated that the work of expert does not reduce the auditor's responsibility. And if the auditor makes a reference of the works of an auditor's expert in an audit report, because such reference is relevant to an understanding of a modification of the auditor's opinion, the auditor shall indicate in the auditor's report such reference does not reduce the auditor's responsibility for that opinion. So in case if it is a modified report, the name should be given. And again, just like principally as we have discussed, the reference should be given that this reference does not reduce the auditor's responsibility for the audit report in case if it is modified. So I believe the application and other elementary material shall not be covered here. And I would conclude this essay again that with the final comments upon it, like the auditor's expert can be engaged by the auditor in case wherever he does not find himself competent enough to place opinion upon certain facts. And the engaged experts must be independent. They must adhere to the standard of quality, and the auditor must ensure that the working standards must be as that of the auditor himself, and there must be complete independence. The data should be given to them. A proper agreement must be there in the place. Their work should be reviewed thoroughly, and based on that only, the auditor should place his reliance upon their work and either modify the report or should give a clean opinion onto it. So thank you very much for listening to me so patiently. Now the house is open for any questions. Are there any questions?
Can you hear me?
Yeah, you're on.
Yes, sir. Thank you so much, Ustad ji, for such a wonderful deliberation. You have covered so many things, almost covered all the aspects of the using the audit of the using the work of the other auditor as well as the auditor's expert. So we are having some questions for you.
Yeah.
So first question is, what type of the work will used by the statutory auditor?
What type of?
What type of the work is to be taken from by the statutory auditor by the other auditor's work?
The question is not very clear. What type of work should be taken by the statutory auditor of the other auditor? Like I have explained in a small example, we have been doing branch audits for a long time. The central statutory auditors, they have been auditing the bank as a whole. However, the branches are being audited by the various auditors. So when we talk about the other auditors, you can relate it directly from there. Or let's say let's take an example. If there is a subsidiary and the subsidiary has been audited by the other auditors, then and the consolidated financial statements, the financials of that particular subsidiary are to be consolidated in the mainframe financial statements of the company. So in that case, the other auditor's opinion must be taken care of by the principal auditor itself. They should use the audit report that has been given by them.
So if the statutory auditor plans to rely on the work of the internal auditor with respect to the control testing, does the statutory auditor need to perform any further test of control?
See, this is not covered by my essays that I have been taking care of, essay 600 and 620. It is being covered by the essay 610, the work of the internal auditor. If the principal auditor does not believe that the controls are there in place, like the statutory auditor statutorily also required to give an opinion upon ICO file, internal control over financial reporting. So there, if they believe that the internal auditor has not pointed out anything, or maybe they believe that the audit the controls are not into the place, or they are into the place, however they are not functioning well, they must perform some audit procedure. They cannot plainly rely upon the audit reports of the other auditors. So we're trying to understand this. We cannot just simply say that yes, we have seen the audit report and we are comfortable enough. Like whenever we go to the branches, we cannot say the concurrent auditor must have done everything and we are believing upon their reports in the branch audits itself. Or in case when there is an internal auditor's report, we don't say that since the internal auditor had been engaged throughout the year and believing upon their report is sufficient enough. We must put into our efforts also as a statutory auditor. And if we believe that the controls are there in place and they are not functioning well, we must put into extra substantive procedures and we must test the controls. And if we believe that they are into the place, so we can also rely upon the auditors. However, we need to do our job as well.
And in the same line, sir, if on any of the issue, there's a difference of opinion between the principal or the group auditor and the branch or subsidiary co-auditor. Difference of opinion of the principal or group auditor and branch or subsidiary auditor, whether it is okay if the branch or subsidiary co-auditor gives report as he wishes and sends the reasons for doing this to the principal or group auditor?
Completely okay. Completely okay. The principal auditor shall frame his own opinion. He needs to look into the materiality and he needs to look upon the, because this case has practically come up before me. Again, I would take the example because see, we all relate to the bank audits nowadays, the same days are going on. So in relation to that, I'm taking to this question again. If you believe as a branch auditor that this account, see, I also took this example into my deliberation as well. If you believe that this particular account is an NPA, however, it has been dressed up in a way that it is not falling into the definition of NPA as per the RBI guidelines, you can always give a modified opinion onto it. Let the principal auditor, let the central statutory auditor decide upon it. And the central statutory auditor, if he has a disagreement with the branch auditor's report, he can always write it. Because both the auditors are responsible for their own audit reports, right?
Yes. This you have already covered. Same question one member is asking: how can we rely that whether the another auditor has worked with the professionalism?
So, sir, we all belong to the principal body ICAI, and we all are adhering to the standards on auditing. So, relying upon the very fact that the other auditor has worked with the same competence as you are working, you can also use some procedures onto it, some substantive procedures onto it, since you would also be working onto it.
And is it not necessary to incorporate name of the helping auditors in your work?
No.
No need.
No need. See, there is no point of helping auditors. There is no concept as such. There are joint auditors. They are responsible for their respective audit reports. They may have disagreement upon their audit reports, right? They can write upon their opinions. There can be one auditor who has modified the opinion. See, let's say for the there are 3 joint auditors and they have used the work of an expert. And one of those auditor believes that this particular expert's work indicates that there is a material misstatement. However, 2 of them does not believe onto it. So one auditor can modify based on the work of the external expert, right? And the 2 of them will remain their audit report clean. However, in future, if it is found that actually that there was the material misstatement and the expert was correct, so now these 2 auditors, those who have not modified their opinion, would be held responsible for it.
So how can we identify if these experts are independent or not? Any checklist is there to guide to for evaluate?
Sir, in SA 620, they have given a very extensive application and other explanatory material. You can go through that. Also, how to get to know about it. There will also be an agreement with the external expert, and that external expert agreement must contain the clauses of confidentiality and clauses of independence. So you must ensure that, because before engaging the other expert, you must ensure that the person is not in any kind of relation with the audit.
So last question: in audit of the insurance company, can actuary, employee of the company who reports to the CEO, be considered as the auditor's expert?
No, that is management's experts.
That
It is
management
clearly
accounting.
written there in the auditing standard on audit.
Fine, sir. These were the questions for you. Thank you so
Thank
much
you.
for sparing your valuable time. And
Thank
you have shared a lot through your expertise on the various intricacies on using the other work of the auditor as well as the auditor's expert. And once again, thank you so much for sparing your valuable time in these busy days during the because branch audits are going on and everyone is busy, and sparing your valuable time and acceding to our request on a very shorter notice. Thank you so
Thank you
much.
so much. Thank you. Thank you.
On behalf
Namaste.
of ASB of ICI, once again, thank you so much.
Thank you.
Thank you.
Namaskar.
Thank you.
Thank you so
Thank
much.
you.
Thank you.